So simplification and lessons learned. I think we've done a lot of good on promoting simplification. What we attempted to do in simplification is we wanted to reduce the cost and complexity while either maintaining or improving the usefulness to information to users. We view these as narrow scope things that we could do in 1 to 3 meetings. And what we found is it's not so simple to do that. And the reason it's not so simple is because sometimes the outcome matters. There's been ideas that we've had that I believe are very simple. However, it gives a result that is not as favorable as the result today. So what we've observed is sometimes the market prefers the more complex accounting when it's a favorable result. And one example is debt classification. This is the situation where you renegotiate your covenants that you violated subsequent to year-end, but prior to the issuance of the financial statements. So we had originally thought, well, let's get rid of the Type 2 exception to that, or Type 1 exception to subsequent events, and just say, show it as current because you violated your covenant, disclose that you had a waiver. Now, some of the former board members, I think, that had lived through this attempt a few years prior, called us privately, and this is always helpful to say, are you sure you know what you're doing? I should have listened to their advice, to be honest with you. But what happened was it was quite clear that preparers, specifically small business and private preparers, wanted the more complex accounting because it was a better result. We also found out that sometimes what seems simple actually is more costly, and this is the intra-entity tax transfers. And so in those cases, we've decided to do more research. But I think the real benefit of the simplification initiative is a cultural evolution at the board, that the idea that simplification can be carried through to all of our projects.